Well, what an incredible afternoon so far. Our closing speaker today is Brent Lemanski. Some of you might remember Brent from speaking at our VP conferences back in 2019 as he traveled coast to coast with IDC Worldsource. Brent's primary responsibility for liaison with all Canadian LIMRA and LOMA member companies. His activities include visiting executives in member companies, conducting workshops and planning sessions, and applying benchmarking information in problem-solving sessions and speaking on industry issues and trends. Prior to joining LIMRA, he spent 20 years as an executive with Manulife as an agent, and then as an agent and agency manager with Dominion Life of Canada. He recently spoke at our business development meeting where he shared with us consumer and advisor trends during COVID and what we might expect post-COVID. Please join me in welcoming Brent Lemanski. Brent?
Pleasure to be here. I suspect a few of you have heard me speak before. I should remind you that I think my role as a presenter is always twofold. One is to inform and one is to provoke. So if you don't feel a little provoked by the end of my time with you, I won't feel like I've done my complete job. My goal is to share a bunch of information, pretty new information, with you to help you better connect with clients, to improve communications, to meet changing expectations. And I was reminded of something as I was thinking about the presentation today of a saying you may have heard me say before, and that was several years ago, 20 years ago, probably longer, when I was with Manulife. I attended a direct marketing conference before direct marketing was a big deal. And I sat down at the cheese vendor fair thing at the end of the day with my glass of wine, and this old guy came and sat down at the table beside me. Now, in hindsight, that old guy probably looked a lot like I look now, but that's room for another story. And I looked at his name tag, and we'll say it was Greg, and I introduced myself, and I said, "Greg, what do you do?" And Greg said, "I'm the director of the Grain Marketing Board of Iowa." And I said, "Forgive me, but why would the director of the Grain Marketing Board of Iowa come to a direct marketing conference?" "Son," he said, "I come to learn new ways to say old things." And I'm reminded of that because in many ways, that's what we're doing right now in the way in which COVID has impacted consumer attitudes, trends, and interests. The fundamentals are still the same. People die, people become disabled, people need to retire. People care about themselves and their families going forward. But the way in which we're going about that has changed. New ways to say old things. As I was listening to opening remarks today, I heard George, Phil, Paul talk about essentially the marriage of digital with hands-on to create an improved client experience. And you're going to hear a little bit more about that from me in the presentation I'm about to share with you. And then in Mike's stock presentation, Mike had some really interesting stuff around changing of the role, changing of the relationship. And I think you're going to find some things here that will reinforce and expand on Mike's comments as it relates to general concepts, but as well as outreach. Now, if you've heard me speak before, you probably have seen my disclaimer. As you know, all presentations need to come with a disclaimer. Mine is, it's my opinion and you're entitled to it. And what I mean by that is if you see statistics on the slide, they were created by our PhD researchers. If you hear anything coming out of my mouth that's other than that, you use it at your own risk. It's my interpretation of the data and also based on conversations of executives like those folks at IDC and people in this room generally today. And so in the presentations around change going forward, I've used this slide for some time, and that is, what are the disruptors going on in our industry? And the ones we've been talking about for a long time are regulation, technology, threats to distribution, robo we have talked about, demographics, the rise of the consumer. And then of course, the big elephant in this room is COVID and how COVID has impacted this story going forward. And so I'm going to share mostly of my remarks with you today on the impact of COVID and how it's changing things. However, I heard what I thought was a great Canadian COVID joke over the holidays that I would like to share, and it was, would you have believed 3 years ago that if you got together with your family over Christmas and everyone smoked marijuana, the illegal part would be the family gathering? Even my American colleagues understand that, although it's not been legalized in the US. So let's think about the mind of the consumer. In 9/11, we all learned that life was fragile and that in fact, events were unknowing, unexpected, and could be catastrophic. And then consumers went through the financial crisis, and they learned essentially to trust in nothing. They learned with the issues associated with AIG that you couldn't trust big organizations, big financial institutions. And they learned from social media and how widespread that is, and Bernie Madoff, that you can't trust advisors either. Trust in nothing, verify everything. And then we come across COVID, when we all feel extremely vulnerable. We know that it's unpredictable. We know that it's fragile and challenging. I heard someone say a while ago that if you don't think one person can change the world, just try eating a bat. Think about the impact that this has had, regardless of the cause, on the totality of society. And so since COVID, there's been a lot of speculation around what the future is going to look like. We heard some of that even today, and it's good to get a sense for what we think might be the case. But I want to quote one of my favorite philosophers, Mark Twain, who said, "Supposing is good, finding out is better." And LIMRA is all about finding out. LIMRA is a research organization, more than 100 years old now, operates around the world. I'm going to share some research with you that's based on primarily Canada, some US stuff, because the attitudinal stuff crosses the border really well, and a little bit outside of North America. Now, before I get into the actual data, here's the broad categories of pieces of information that you're going to hear, that I want you to think about the impact on it has on primarily your business relationships with clients, but you might even think about it relative to your own situation in that with family members. First of all, that consumers are much more diverse and digitally sophisticated than they have ever been, and that is increasing rapidly every day. There are high expectations for consumer service and a digital experience, not or a digital experience. I'll talk more about that. There's crowded financial mindshare. Think about all the advertising that's going on these days around cost-based investing and sort of commissions versus not commissions, et cetera, as well as a plethora of products that people are hearing about from multiple news sources. COVID has been disruptive to the mindsets and behaviors of consumers, increasing the need for security as well as virtual sales and service. We'll talk more about that. Consumers have many resources around financial products, and yet literacy is really low and confusion is very high. And I'm going to give you some examples of that. And finally, you're going to see that the desire to act is strong, but most people remain inactive, and it requires a proactive response from the industry, and particularly from people like yourselves. Now, before I get into the COVID research, I want to share with you some ground zero kind of comments around setting the stage of understanding. And so this is what the Canadian environment looked like 2.5, 3 years ago, when we all got together frequently without any fear of the impact of COVID on any of our lives. And so LIMRA has done a lot of research, ownership research on Canadian consumers. And I'm going to give you some of that data based on a study we did back in 2019. And this slide shows ownership of multiple products by household of Canadian folks. And so we surveyed about 3,500 Canadian households, segmented geographically as well as demographically. And we said essentially, does someone in your household own? And here you can see 49% said yes to group life, the top category, 5% yes to segregated funds. Now, if you ask these at a personal level, of course, the numbers would be lower, because if only one person in the household owned group life, they would fall into this category as 49%. I'm going to give you a second. You can look across these categories, but but it suggests there are lots of reasons to have conversations with lots of households in the Canadian marketplace. Drill down a little on the life piece. This next slide gives you some longitudinal view. When we do this research, we've done it for decades. You can see what these numbers look like back in 1982 versus 2019. And I've added a category here. That top line now says, does anyone that's old own individual life or group life or both? So that dark blue line at the bottom says only 44% of Canadian households own an individual life insurance contract, less than half. About half own group. And because you can own one or both or either, about 2/3 of Canadian households own some kind of life insurance, individual or group. Now, what that means, of course, is that 1/3 of households own no life insurance. And you could walk down any street in any community, and every third house would own no life insurance, individual or group. That is a little skewed by segment, but not nearly as skewed as you might like. So Canadians, in large part, are uninsured. Now I want to look at the amount of coverage that they have. And forgive me, I have to change my screen here because I'm blocking my own numbers. So here you see, of those households that do own, how much do they own? And I just want to focus for a minute on the far right-hand column of households that own individual life only. They own in 2019 $112,000 on average, and that's 1.8 years of household income. You can see folks who own both own 3.5 years of household income. If you apply any sort of heuristic, any rule of thumb around what ownership should be, and typically we talk 7, 9, 10 times income, not only are a large percentage of Canadians uninsured, but those who are insured are underinsured by most measures. We then go on and ask them, how do they feel about what they own? And 30% say they need more life insurance, unaided by any kind of needs analysis, any kind of rigorous conversation with a professional to determine what that is. Back in 2019, with 16 million Canadian households, that meant that 4.5 million households in Canada believed that they were underinsured. And no, I don't have their names and addresses. I know some of you have seen these stats before, but I want to anchor this for what this is going to look like then post-COVID. When we ask them why they own life insurance, we see the usual triggers. Here you see there was some change between 2013 and 2019. And I don't think the change is very important. What I want to point out here is that most of these reasons are the typical triggers that we think about, and they are lifestyle changes. They are got a job, got a promotion, had a baby, got married, got divorced, retired. And some of them are, someone close to me had some kind of an unfortunate experience that it made me think like, perhaps I ought to buy life insurance. But there was strong belief in the product by Canadians. We then asked these folks, though, how likely are they to buy an insurance product in the next 12 months? This represents purchase intent from 6 million Canadian households. 1 in 3 households said that they would be likely to buy life insurance in the next 12 months. I'm going to give you a second to look down the rest of this list. Think about your client base, or think about the referral potential from your client base, and think about how big the market opportunity is in Canada, which is often perceived to be overinsured. That's just not the case. Now, we know that a lot of these folks aren't going to act on what these beliefs are. In fact, I used to think that that the consumers, when they responded to our surveys, told the researchers what they thought was politically correct, and that is, yes, I need more, as opposed to the truth, and that's why they didn't actually act on it. I've now moved off of that belief based on this slide. And that is what consumers tell us they have difficulty about when making purchase decisions. They have difficulty understanding the details of the policy. They have difficulties understanding how much to buy. They have difficulty understanding the kind to buy. And so I don't believe that when they don't buy it because they decide they don't need it. I believe they procrastinate. I was very moved earlier when Caitlin told her personal story. I thought that was very courageous to tell that story. And she talked about, what if she hadn't acted on that? What if she said, I don't have family history, it's not imminent, I'm not going to buy the insurance that I really need to protect my family, and the impact that would have had on her and her family. And so that's what's happening with a lot of these folks who feel but don't act on that uncertainty around how much to buy, kind to buy. And by the way, and here's a provoke comment for you. We did some research a few years ago, and we asked consumers how they felt, how knowledgeable they felt about life insurance after meeting their new advisor. And new didn't mean new to the business, new meant new to them. And something like 63% of them said they left that interview more confused than they arrived. And it's because we use language that's convenient for us, but not for the consumer. I share a platform periodically with a woman who works for a company called Maddox Douglas, and they do communication work in financial services, particularly for younger generations, but not exclusively. And she puts up a slide that I've stolen periodically. I don't have the slide here, but if you imagine, she puts up a build slide that has 3 words on it. And the first word she puts up on the slide is premium. And she said, what do you think your consumers think when you use the word premium? They don't think something they pay for a product. They think the extra features they got on their smartphone or their smart TV and the way that all of that is going forward. And what do you think they think about when you use the word rider? And she'll say, if it's the Olympics, they're thinking equestrian. And if it's not, they're thinking Harley Davidson. And then she puts up the next word and says, and you know what they think about when you use the word protection. So we're really kind of removed from the vocabulary of the general population, and it just compounds the issues associated with these items. And I want you to remember this list later on when I talk about the movement into digital and consumers going more direct, at least during COVID, and the difficulty they have in deciding these questions for themselves, unaided by some kind of advice. This next slide is a view of what Canadian consumers said back in 2019 about how they prefer to deal when buying insurance or financial service related products. And 75% of them said in person only. And then you can see the other categories on this slide. By the way, I'm on a personal soapbox these days to change our language. I don't think that we should use face-to-face anymore to mean in-person or flesh-to-flesh. In many ways, we are face-to-face today, although it's a different version of face-to-face than we have historically thought about. But many, many consumers and certainly families are learning to deal face-to-face in new and creative ways beyond what they've been before. So you need to think about what that is and new skills and technologies that allow you to work more effectively in those areas. By the way, oftentimes when I speak on this subject and I talk to folks about the desire to meet in person, one of the first comments I get is, well, this is probably really skewed, right? It's really skewed by age. And in fact, it's not. Look at these categories. Yes, it's a little skewed, but not as much as you would have thought. And I liked Mike's comments, and I'm gonna get the language wrong. I didn't write the phrase down, but he talked about the journey that consumers go through. We've done some journey mapping, if you will, based on general research on the slides that you've seen so far around consumer need and how they solve that need. And if you think about it, many Canadian consumers already know they need more life insurance. What's the first thing that they do? They Google it. They go to a variety of sources, sometimes just unknown sources on the internet, sometimes family and friends, sometimes social media. And then they try to educate themselves. But it's very difficult for them to act on that, as you can see by all of our research. So what they then do is they seek out some kind of professional advice to do two things. One is to answer the questions they couldn't get answers to when they did their individual search. But the other one is to ask them questions they weren't smart enough to ask themselves, protect them from themselves on things that they should have considered but didn't. And they want 2 or 3 options. They'll pick the middle one, by the way. They don't want to seem cheap and they don't want to seem extravagant. They'll act on it and then they'll go back to enjoying their families. So that's kind of the general journey from my perspective we have on this. And it's evidenced by the work that you've seen up until now. Now, bear me a second, I'm going to check chat because I'm about to move on to COVID and COVID research. Are there any questions here that I should be referring to on the research? I don't think so. Okay, forgive me while I talk to myself for a second. I'm going to switch gears now, if I can, and talk about in pandemic consumers, COVID and post-COVID. So here essentially you see those same slides that I showed you earlier on what the world looks like during COVID. And we all know it, we've all experienced it. Since COVID started, LIMRA has done something like 75 distinct pieces of research oriented around COVID and its impact on our environment, our society, our business. Targeted at 3 audiences. One is the consumer, one is the advisor, and one is the employee, the future of work, return to office, all of that stuff. And so I'm going to share primarily some stuff with you on consumer, and I'm going to throw in some things relevant to the advisor. So much of the data you're going to see in the next set of slides was a survey we did of 5,000 Canadians in the middle of the pandemic that talked about their reaction to the pandemic. And I'm going to sprinkle in some things from other sources. And this first slide is in fact one of those things. This is a piece of research we did jointly with McKinsey and Company, not yet published. And it looked at COVID-19 as a motivation to buy. First thing I wanted to do is I wanted to take a look at the top and bottom bars on this graph. These are reasons and ways to have meaningful conversations with your clients. A large percentage of consumers, 93%, said they now have greater appreciation for personal, family, health, and well-being than pre-pandemic, 93%. And the latter one, greater interest in wellness resources, 89%. Greater interest in wellness resources generally as a result of COVID and the impact of them feeling more vulnerable to change and more concerned for their families going forward. And you heard Mike talk about some of the stats that he had from other sources that talked about increased need for life insurance products, savings products, and retirement. And here you're going to see some things that support that based on our research. But now look at this middle bar. 96% of consumers said increased awareness, need, demand for life insurance. And there's no question, there's little question that these are going to go on forward, even post-pandemic. And I actually think in some ways, the fact that the pandemic lingers with new variants increases even more uncertainty going forward in the minds of consumers around, is the next variant just around the corner? When this one's solved, is there another one that's not sort of down the road from that? I think we're going to have this ongoing need to think differently about protecting our futures and our families as a result of this cohort experience. This slide is Canadian specific, and it talks about COVID's influence on the minds of Canadians. At first blush, these numbers don't seem very high, but I put it in because I think it's significant. 1 in 9 Canadians said the pandemic improved their opinion of life insurance. Now, keep in mind, that was already on a very high percentage of the Canadian population that thought favorably about life insurance and financial services products generally. The fact that I'm focusing more on life here doesn't mean that you can't extrapolate this to other financial services products, because this is more about family well-being and caring for self going forward. 1 in 6 said that COVID has already increased the likelihood that they'll purchase life insurance in the next 12 months. You go back to that pre-COVID slide, 30% said they were going to buy more life insurance in the next 12 months. If we increase that by 1 in 6, arguably 30 becomes 40 or something like that. Close to half of Canadian households would say that they're likely to buy more life insurance or retirement products in the next 12 months. And here too, 2/3 of them predict that their increased interest will continue beyond the pandemic. And in fact, when we did this research, more than 1 million Canadians said they were prompted to shop for life insurance in 2020 because of the pandemic. This slide is a little busy. I hope you can see some of it. But we talked to the researchers and we got some information around who are the in-pandemic shoppers to get a sense for, do their profile look the same or different from non or pre-pandemic shoppers? One of the things I would like you to think about as it relates to your business going forward is how you segment and market to your client base, or how you seek out referrals from those in order to focus on those people who A, have the greatest need, but also B, who have the greatest inclination to act, increasing your efficiency in time spent with clients. And so if anybody wants access to this deck later, my friends at IDC have this and can give you a PDF version of this. I'd encourage you to use it with clients. I think it's really valuable tool to start conversations with or to ask for referrals with. On this slide, there are 3 categories I would like to point out that should be on your radar screen as you think about new ways to say old things or new ways to do old things in your practice going forward. On this slide, people who have children under the age of 18 are much more likely to be in-pandemic shoppers. The old number was 28%, the COVID number is 41%. That's an enormous lift in pandemic shopping. 67% of them are much more likely to be knowledgeable about insurance rather than 53% pre-pandemic. Side story on this, we did some research around internet buyers a little while ago, and the internet shopper is not intuitive. And there's a bit of a caveat in this for you to be thinking about, but also maybe an opportunity. And so I'm going to do this from memory. I'll be wrong, but not very wrong. The average internet shopper buyer of life insurance is a 35-year-old male married with 2 children, already owns life insurance, and feels better off than his peers financially. So well-to-do relative to that age bracket. One of the key factors here is that he already owns life insurance. So he feels knowledgeable about the process and enabled with the technology. So think about clients in your deck or children of clients in your deck who fall into that category. And you know that they're going to be doing more online work. You know that they'd like advice. So think about creating communications mechanisms that bring them back to you when it's time to make a decision to help them through that, because that is, I believe, where you'll have had more impact. And the other noticeable category on this slide was in pandemic shoppers are more likely to know someone who actually had COVID than not knowing that. This next slide talks about what creates or causes people to shop. And so I showed you a slide 2019, and we talked about all the normal triggers. Bought a home, got a job, got a promotion, had a baby, got married, got divorced. But look at how the top of this list right now, it's COVID. The majority of the shoppers actually now are shopping because of COVID. So you need to use this as part of your vocabulary around helping people do the things that they already know that they should be doing. This is not a back the hearse up kind of connection. It is, we all know and care for our families, and that there's a lot of uncertainty right now. And I'm talking to a lot of people who think they would like more information around what's the safest way for them to protect their future and their families. And so there are multiple ways that we can help that across a long list of product portfolios, if you will. Switching gears again a little. We ask consumers through all of these stories, research projects. By the way, when we do research over the years, typically we ask about 70% of the questions the same every research period so that we get trend data, and we ask about 30% new questions so we can be aware of new influences in the marketplace, the economy, the psyche that's altering things going forward. So look here about most valuable sources of information. Back in 2015, consumers said it was an agent, broker, advisor. And then the internet, then family and friends. You can see those categories at the bottom of the sleeve. Notice that the internet has stayed about the same, not usage, but value. But notice that the advisor piece is falling and the family, friends, coworkers piece is rising. I think that's a measurement of social media and the fact that in pandemic, people have not been seeing advisors as much as they were pre-pandemic, and they've been going to other sources knowing they need to do something about improving their lot in life. By the way, the next few slides, it falls into the category of, it's my opinion and you're entitled to it, because here I part company a little bit with the pure research, especially when we start to predict what this might look like post-pandemic. So I don't think that inherent in this change necessarily is a fundamental change in belief of value of these sources. I think it's more around what we have forced on ourselves through the pandemic. Advisors didn't want to go into people's homes. People didn't want to invite advisors into their homes. They stayed in their nuclear units and they did more social virtual stuff. And you see a narrowing of these lines in how they're gathering information and what they're finding of interest. This next slide asks people to think about, shoppers to think about the role of the internet and how things might change going forward. Again, there's a lot of information on this slide, numerous categories. In the interest of time, I'm going to share with you three that I think are kind of most important and might impact your business going forward, your relationships, as you do this with clients. New ways to say old things. If you can see the detail on this slide, virtual meetings. In 2018, 48% of consumers said they would be open to virtual meetings. That's now jumped to 65%. 2/3 of Canadian households, Canadian consumers, have said virtual meetings. Mobile service options has increased from 46% to 64%. And so the other thing I think you need to think about in this regard is that the way in which carriers are going to start to communicate with consumers is also changing. Most carriers are talking about the marriage of digital with advice giving, and they're talking about accessing consumers with smartphones or many different mobile applications in order to get information in the hands of consumers. We know that consumers still want to go flesh to flesh for advice, but they're going to get more options to find information online as organizations start to react and create more service options. So I think the world of the consumer, the world of the advisor, is going to change as much around application of product to complex situations as it is to helping consumers think through the way they gather information before they then go and make a decision in order to act on it. And I think that's coming out in these categories. And I think it's a subtle but significant influence on business styles going forward. And I believe the movement to hybrid. And then finally on this slide, one I want to comment is consumers want to communicate via social networks. That's jumped from 35% to 47%, almost half. So there's this whole acceptance of virtual that in a very short period of time has advanced much more quickly than it might have without the pandemic. The other important thing to relate here, I believe, is that consumers' expectations are changing by things going on in the world around us that aren't even directly necessarily connected to our particular business. There's changing expectations. This next slide is a statement, an old one, from an IBM executive who said, "The last best experience that anyone has anywhere becomes the minimum expectation for the experience they want everywhere." So in fact, Jeff Bezos is changing the world of expectation even on us, but so is a plethora of other product sources that organizations are using, changing the dynamic in which consumers' expectations are altering their expectation of you going forward into your business. This next slide, also from our in-pandemic research, asked consumers from what source they bought their individual life insurance product. And now you can see across this category, the numbers of direct purchases, internet, phone, mail, at work, have gone up considerably during the pandemic. Now, there's also a caveat for me here where I part company a little bit from this research, again, as we start to push out this forward or not. I think this does speak to people's interest or inclination. By the way, I also think it speaks to perceived need. If they in fact did buy these on the internet by phone or mail, they did it without the, think about the sold not bought mentality that we've talked about for years. And so if they're actually going out and acting on their own to do this, this is kind of an interesting portrayal around at least their openness to do something with this. However, I also think that's happened because during the pandemic, as I said earlier, we forced people into this mechanism because you didn't want to go in their homes. They didn't want to invite you into their homes. We increased non-med limits. We increased non-fluid limits, and we made all of this easier. The other thing I would tell you as you look at this slide and other research that we've done, this is an, if you will, an activity slide. Clients think about the life insurance that they bought by policy count. The industry thinks about the life insurance that they bought by premium. And so if you look at LIMRA sales data records over the last couple of years, a much larger percentage of sales come through the direct or through the face-to-face delivery channel, the flesh-to-flesh delivery channel, something like 93 or 98%. And the reason is all those policies are much bigger than the small term policies that people are buying directly on their own. And so you have to be careful in how you interpret this data. However, it does give us some indication of engagement and ability to start to look for alternative methods. I'm nearing the end of my deck, and then we'll do a bit of Q&A if there are any questions. This is a longitudinal graph that demonstrates how consumers say they prefer to buy individual life insurance over time. So here you see back in 2013, that split was pretty much like that distribution preference slide I showed to you earlier. 74% said they'd prefer to buy face-to-face. And you can see the numbers below. The internet, at work, phone, mail, etc. The internet was down at 13%, I suppose, yes. Now, today, the internet went up to 41%, and in-person went down to 32%. And that was, again, reflective of what I've already talked about, and that is you couldn't go into people's homes, et cetera, et cetera. So people shopped online. Now, where I part company with the research, it is the post-COVID prediction on what this is going to look like. You see, I think that what this doesn't demonstrate going forward is complex products, and complex needs, which require advice giving, and still for the most part requires human advice giving. So I actually think these numbers, if you see the circle on this graph, will actually expand. The gap will be much wider than that, but it will not be as wide as it was back in 2013. But there'll also be this movement to hybrid. And that is, I think you need to start to think about segmenting your database, not just on age, need, makeup, product preferences, but also by communication channel suggestions. And that is, some people, regardless of which category they're in, will be more inclined to want to deal virtually than others. And I think you need to be more sensitive to that. And I think you need to think about how those relationships are going to change over time. Before I move off of this, I want to show you this generational view of that same graph that I showed you a minute ago. Not surprisingly, the boomers, if you will, think that the world's going to change and look more like it did pre-pandemic. Gen X and the millennials think less so. My personal view is that at the end of all of this, it's going to be a slightly narrower gap than is shown on the boomer graph here, but broader than the Gen X and millennial side, only because of what I talked about around complex products, complex situations, and some return to some level of comfort, given what's happening in the COVID environment. Now, a slide here I want to share with you that I think is really important is around the amount of confidence that consumers have in advisors. And so remember back when I showed that first slide around disruptors and concerns impacting consumer behavior, one of them was lack of trust in institution, lack of trust in advisors, and I cited AIG and Madoff in that category. Well, look at this slide here, and I'm sorry I don't even remember the source. I guess it was LIMRA. In October 2008, only 8% of consumers said that they had extreme confidence in advisors. 49% said some confidence. And look at how that looks like in October of 20. The aggregate of those numbers has gone up to 80%. That's enormous confidence boost consumers have in advisors. Whether it's caused by COVID or not, I don't know. What's relevant is that it is verifiable and it speaks well to what consumers are looking for from people like you going forward on these categories. This slide is my general slide around observations as it relates to the research that we've been talking about from a consumer perspective, and that is, you know what, we're never going back to where we were. Client experience and technology advances are driving industry growth. Clients see the need for and want a better experience, and they're learning that by categories outside of financial services. And they want faster, easier process enabled through technology, customization wearables, remote underwriting. There are many, many examples that are making life easier and make sense to them. The COVID silver lining was 10 years of progress in one. I talked to many of my corporate clients around work from home and how quickly that happened. 3 years ago, if you would ask them about our ability to work digitally effectively from home, they would have said, it's 5 or 8 years out. And in fact, they figured it out in 3 weeks when they had to. And no one's going back to that. All of the clients I'm talking about as it relates to a work from home future of work, there's a drastic change in how people are going to communicate. You heard Phil, I think, at the beginning of this thing, talk about drive time in Toronto or even Vancouver and other places, and no one wants to go back to that, me included. And so you can see the rest of these. Product, I think, will become less of a driver. Product is important, but product is not as distinguishable as it might be. And remember, consumers find product to be difficult. It's more going to be around experience, relationship, people understanding them and giving them the trust that they need to make decisions to do the things that they know that they ought to be doing. And then a last caveat in this is it's not all sunny. Privacy concerns, I think, will become a bigger deal, and so might regulation. It's impossible for the regulators to keep pace with the changing technology and things like AI and data and all of that. So I think we're going to see on the horizon some significant ongoing issues around privacy concerns, technology, compliance, due diligence, et cetera. One last slide, my opinion on this, and then I'll take some questions if there are some. What are my suggestions based on the research that I'm seeing? And the first one is reach out to clients who bought recently in the last 24 months. All of the COVID research suggests that those people probably didn't buy as much as they would have bought now if you were out speaking to them now. And you know they're healthy, and you know that they have a concern, that they in fact acted on it. And this is the prime time to go back and revisit that. Congratulate them on their purchase, on the decision to look after their family, and suggest that maybe it's time to reconsider given that this uncertainty is going beyond. Just as importantly, reconnect with clients who considered but didn't buy. There's a strong chance that those people are now actually motivated to act on it and wish that they had, based on the experience that they've had with COVID. And there's a lot of incentive for them to talk to you about a lot of things. Use consumer statistics to ask clients for favorable introductions. You can use stats that you've heard in the last hour or throughout today, and I suspect tomorrow, to go back to clients and say, you were just at this seminar that talked about the needs of Canadians, the perception of Canadians impacted by the pandemic, and that a large percentage of Canadians wish they could do more for their family, but they don't know how to go about it. And maybe if we were in the same room, you would introduce me to them, and maybe I ought to do that now because they will be better off for having had the experience to test and consider doing what they think that they ought to do. And then the last one truly is become a hybrid advisor. I really do believe we're going to marry digital and hands-on, like was said at the beginning of today. Think about that from a client perspective. Try to determine which clients best want sort of virtual. Recognize that almost everybody is going to Google something now. So you might even find some advisor-friendly sites to encourage them to go to do their search, knowing that they're going to come back to you at the end of the day when it's time to make decisions on this stuff. I've been talking at you a lot. I'm kind of done. I'm going to turn it back over to you, Greg. I'm going to stop sharing here.
Thank you, Brent. As usual, a lot of good information there. And I know that all of us at IDC really enjoy the time that we spend with you. And today was another example of a lot of information. And on behalf of all of us at IDC and the advisors, thank you very much.